So we're going to talk about Intel and why we had a gap down on Friday from the $50 level. Despite the gap down, which caused the week to be red, price is now in a key level that served as resistance support in the past. And if you scroll to the monthly chart, price is still respecting this monthly uptrend line, which started back in February of 2023. Now, typically when you get too extended from, say, a moving average or a trend line, you usually have a pullback. And so this potentially is the pullback before the next leg higher. So again, let's get into why the stock gapped down on Friday. So they reported their earnings, in which Wall Street wasn't impressed. They reported weaker than expected guidance, and that gap down equated to a wipeout of $25 billion in market value. So Intel said it expects to post revenue in its current 3-month period of 12.2 to 13.2 billion, a range that was well below Wall Street projections of 14.5 billion. So I apologize, they didn't report earnings, they provided guidance. So here's what the CEO had to say. He flagged the discrete headwinds due to the auto chip division Mobileye and its programmable solutions spinoff as its impact on overall revenue, leading to the downbeat guidance. Now, if you don't know, Intel's core business is the PC and making chips for the PC computers and traditional service, but it's been facing seasonal demand pressures as well. Now you got to remember they invested heavily, particularly around the development of AI technologies over the past year. And that's also put a dent in their, in particular, gross margins. As a result, investors are beginning to collect that bill from last year's massive AI investment. And it's a clear message for earnings season going forward. So we kind of talked about this pullback, still respecting the uptrend line, but was extended from the uptrend line. Could we see further downside risks? Very possible. Now again, prices near that $44 level, and this is what I was referring to in the past. It has served as support and should serve as support again, but based on the article we just saw, price can continue to decline. If it did, the next level of support would be this $43 level, which coincides with the 26 weekly moving average. Let's go to the daily chart. And you can see since October of last year, price was respecting the 50-day moving average until Friday. So you do have some short-term weakness in Intel. That $40 level that we saw on the weekly. You have the 100-day and the 200-day right in between. Not only that support level, but also the uptrend line. So if you believe in a stock longer term, you can dollar cost average, or you can wait for the 3-day rule. Wait 2 more days to give you an indication of where price might be heading next. Now, I do like this level though. It's not an A setup, but you do have a rally, basing candles in a rally out, taking out the pivot high on decent volume. You have a gap higher, but you don't have this massive move from the $44 level, so it's not an A setup. So conservatively, wait a couple of days. Aggressively, you can go long now, but there could be more downside risk. Roughly a $3 to $4 additional downside risk, which would tie in nicely with this uptrend line and the next support level at $40. Thanks for watching. Subscribe. Please like the video.